Now it's my pleasure to invite our next presenters. Uh, our next presenters are Penelope, Shen, and Tze-wei from Stephenson Harvard. And they'll be talking about ESG. I have a quick introduction for both of them. Penny is one of the Hong Kong's leading fund lawyers and is consistently sought after for both direct expertise and keen market intelligence. Penny focuses on the establishment and structuring of private investment funds, with a particular emphasis on hedge funds and private equity funds, advising on fund restructuring, distribution and private placement, compliance and regulatory requirements, side letters and derivative documentation, including ISDA and prime brokerage agreements. And Penny actually kickstarted the Stephenson Harvard's Asia ESG initiative and was instrumental to the firm joining the Hong Kong Green Finance Association. So thank you very much, Penny, for joining us today. We also have Tze-wei. She brings deep knowledge of charities and social innovation to her advice to philanthropic foundations and private clients. As part of the private wealth team, she also has experience in trust, wills, estate planning, and administration. She is known for her understanding of the increased mixed use of non-profit and for-profit tools in creating impact, which allows her to provide tailored solutions to enable strategic philanthropy and social entrepreneurship. She was involved in setting up of some of Hong Kong's earliest social finance platforms and vehicles, and is active in B Corp and purpose-driven business decisions in Hong Kong. So thank you so much, Penny and Tze-wei, for joining us today and doing this presentation. It's over to you. You can share your screens and all the best.
Hi, everyone. Raul already gave us a very nice introduction. So I'm Penny, and I have today with me Tze-wei, my colleague as well. Today, we are obviously talking about ESG. Okay, before we move on to the next slide, Raul has reminded us to do some housekeeping. We will have a Q&A session in the end. I know everyone can type in your message Q&A questions in the Q&A box as well. We'll try to reply as much as we can, but because we have quite a bit to go through today, so if in case we don't really get the chance to answer them, do feel free to email us. And that will take us to our opening.
Thank you, Penny. So, hello, everyone. It's a pleasure to be with you today, this afternoon. So let us start with this cartoon here. It is not a disclaimer, even though we're all lawyers. Indeed, ESG is a fast-growing field and a massive universe covering everything corporate citizenship related. So this slide is just to set the stage for this session, where while we don't claim to know all about ESG and certainly do not know all about ESG, hopefully we'll be able to share a few helpful tips on this learning journey with you.
So Tze-wei and I thought it would make things interesting to give everyone a very brief background of ourselves. This is kind of like my journey, not so much SNG, but on the green side. So I was introduced to WWF when I was in primary school, and I already got really interested in green. And after that, I had the pleasure to work with Ms. Christine Lowe. So I've learned quite a bit from her, learning about the protection of harbor ordinance, which she single-handedly pushed forward. I did look into environmental law after I got into law, but at that time, environmental law was actually quite limited in Hong Kong. So I kind of put that aside, and instead I tried to educate my kids. So my 9-year-old now is on the forefront telling all his friends to be green and recycle all the plastic that they use. And I put Tze-wei's picture here because we actually go way back. And one thing led to the other, our path crossed again. And as you'll find out, she's a very inspiring lawyer, not like a typical money-minded person. She'll tell you a bit more about herself in a bit. So I forced myself to come out of my comfort zone, picked up the ESG for Dummy book, and had the opportunity to help the firm get into the space. So we joined the Hong Kong Green Finance Association. And then, as Raul mentioned earlier, I kickstarted the Asian interest group in the firm. So we work very closely with our global strategy in terms of our ESG strategy. And passing to you, Tze-wei.
Yeah, thank you, Penny, for sharing a few facts about herself, her journey. And I must say it has been great pleasure to be able to work on ESG with her since I joined Stevenson Harwood. So I will share a few things about myself too. So before I came back to legal practice, I was I was a journalist, but then I worked for near a decade in the NGO sector and then with a philanthropic foundation and a family office. So I had plenty of experience with charities and philanthropy. And at some point, I realized that we need more than charity and philanthropy to address the challenges that we see today. I was lucky enough to be working for a family office that founded the Sustainable Finance Initiative. And this is a platform that was founded in 2018 for family offices and high net worth individuals in Hong Kong so that they can embark on the sustainable investing journey. And while working with SFI, I came to learn about ESG. I was never a finance person, and now I'm learning about sustainable finance. And it is encouraging to see the investors' enthusiasm for sustainable finance and seeing how we can bring the capital markets into addressing the problem and challenges that we see. So the final fact that I would like to share are these. I'm also a diver. Too bad I can't ask you immediately guess where these pictures are taken. They're actually all taken of underwater Hong Kong during COVID time. During this time, like all of us, we can't travel, but I have dived a lot. And underwater biodiversity Hong Kong is actually amazing. And during COVID time, the water is also particularly clear. In fact, Hong Kong has 84 species of corals, more than Caribbean. Most people probably don't know that. The reason I raise that is also because of my interest in diving and nature, as Penny has shared in her journey. We also are even more committed to ESG and hopefully can bring our work to protect the things we care about with our planet and people. So that's a few facts about me.
For those of you who have participated in an earlier survey that we sent out, this is the result. This is it's quite interesting for us to understand how much ESG is now a part of your work. I thought it was a bit surprising because there's quite a lot of people who say that they're not part of their work yet. But I think part of today's webinar, we're going to show you why that's going to change. Leading to the next page, these are some of the answers that we got from you as well. Some of the challenges that everyone faces in our day-to-day legal work as in-house counsels. So I categorize them into 4 different categories. Some people say that they're not relevant because, for example, it could be handled by their team in, say, Europe, in London, in Japan. It's not so relevant to Asia yet. The legal requirements, standards, etc., are not so clear yet. The culture and mission of the firm, and then as well as the governance and management. So we'll touch on all these points as we go along. I encourage everyone, I know this is a webinar, we'll try to keep this as interesting as we can, but do stay tuned till the very, very end because we're going to give you the takeaway at the very, very end. So these are our topics today. So why you stuck with ESG from now on, and then we'll go through what is happening in Hong Kong, and then, like I said, the practical tips will be at the very end. Okay, so the first thing we want to say here, this is more on the lighter tone. If you have not noticed, Robert Downey Jr. actually has a LinkedIn page. I encourage everyone to follow him. I haven't followed him, as you can tell that. He actually, after decided not to continue with his Marvel Iron Man legacy, to set up to venture capital fund investing in startup that focuses on improving climate risk. I think this is something that is great that celebrities are doing because it obviously raised awareness. And what he said is very true. There's no time really to waste, especially on the E front. We see that in everyday's news. So that's a very good point for everyone to take away today.
Okay, thank you, Penny. So apart from Ironman saying so, why is ESG here to stay? And I would like to start with a few stories. So story one is a story about investment trends. If we define ESG in the context of investments as investments that do not only look at financial return, but also social and or environmental return, then that growth has been staggering. Whether it's bonds or sustainable responsible investment or impact investing, the figures have all been growing rapidly. The latest numbers from July from GSIA, Global Sustainable Investment Alliance, shows that sustainable investments now account for more than a third of global assets. Meanwhile, the number of asset managers and owners voluntarily signing up to a disclosure framework by the UN Principles for Responsible Investing has also been growing 2 times since 2017. So investors are definitely hopping onto the ESG wagon by allocating assets to these products. The growth story continues if we look at different data that came out during COVID. Companies with strong ESG performance outperform markets, and this is just one of the different sources of data showing that. Story two. Story two focuses on the negative consequences of not taking ESG risk management seriously. Number of climate laws and litigation has been growing in the last decade. If you look at the bottom right, which shows 2,347 climate laws and 1,800 something litigation cases, just in June, when I did a similar presentation on ESG, the number of laws was 100 less. ESG-related litigation is also rising and is no longer just against the government, as in like the Dutch court case here. It is increasingly against private companies, whether it's in relation to their disclosure, say the Santos case here, which is being challenged for the clean fuel claims and net zero target pathway, or is in relation to breach of fiduciary duty for a pension fund, which is the 50 billion super fund case here in Australia. And then there are also cases where parent companies are held liable for their overseas subsidiary, as evidence in 2 recent cases in England. And shareholder activism is not restricted to a courtroom. It's also in the boardroom. Just in June, both ExxonMobil and Chevron suffered shareholder rebellions from environmentally minded investors pushing for lower emissions. And of course, not every scandal or events ended up in court. This is just a few examples of companies or organizations that have experienced ESG-related impacts, and you may remember some of them. This is from the Enterprise Risk Management Report by WBCSD, World Business Council on Sustainable Development. Some cases, including Nike in the 90s of modern slavery, 2011, flooding in Thailand resulting in disruptions to automotive and technology supply chain, to more recent, Uber facing sexual harassment scandal leading to a delete Uber movement. And then, of course, there are more. Facebook with data privacy. Deliveroo is launched this is IPO earlier this year because of its treatment of workers being marred in that scandal. Story 3, again, is quite different. And this time, we're not looking at growth, we're not looking at negative consequences, but really trying to look at why we talk about ESG in the first place, which is essentially the urgency of the problems we face, whether it is climate change or inequality. Climate change, we see that UN was warning that we have 12 years to limit climate change catastrophe, and that is from 2 years ago. We look at figures like humans, because of our activities, destroying 83% of wild mammals. And apart from this urgency of the challenge, there is also urgency of the funding that helps us address these challenges. We are looking at a 2.5 trillion annual financing gap for us to reach the UN Sustainable Development Goals by 2030. And of course, that is also being derailed somewhat by COVID-19 crisis, unless we can really focus on Build Back Better. And to focus a little bit more on climate, which is top of the agenda today, not only because we are having the UN Climate Change Conference later in November in Glasgow. The Paris Climate Agreement, most of us would have heard of it or know pretty well about it. It is to get the countries and parties to on an action plan to limit temperature rise to under 2 degrees above pre-industrial level and to achieve net zero emissions by mid-century. How hard it is? To achieve this goal, we need to halve our emission by 2030. But there's data showing that we are actually the way our financial activities, our activities are still heading towards a 3 degrees scenario right now. You may ask, what is the importance of 1 degree or even half a degree? So this is what half a degree change would look like. It means 2.6 times worse of extreme heat and 10 times worse of having ice-free sea in the Arctic during summer, which means that we will have more severe sea level rise with 10 million more people exposed to sea level rise. It will also mean a decline in annual marine catch and crop yield, and 2 times worse on species loss. And now you know why I mentioned coral reefs in the beginning. It will also mean a 99% decline in coral reefs with a half degree change. And for a diver, it is very painful to imagine that. So with all of that, with those 3 stories, it brings us back to why ESG is here to stay, or more why ESG generally. With the 3 stories, we've touched on investment trend, we've touched on investors' demand, shareholder activism, some on regulatory landscape, the risk, litigation, but there are more. We are seeing generational shift in employees and consumers' expectations. We are seeing a shifting discourse on fiduciary duty from whether board could consider ESG to whether it is a breach of fiduciary duty to not consider ESG issues. And of course, it's not all obligations and risks, but ESG can also offer new business opportunities. With our transition to a low carbon economy, there will be new business opportunities. You have shared with us your views on ESG or your pressing, burning questions. I would like to share just quickly another survey of General Counsel, and this one is done by Harvard Law School on their view of ESG risk. As you can see here, I'm just highlighting some of the findings that were interesting for me. So here you see that over 78% of these counsel, they interview survey 69 General Counsel. They 78% said that they have been pressured, they have received pressure in the last 3 years from internal and external groups to increase their commitment to ESG. And actually in the US, it seems like employees is their biggest source of pressure point rather than institutional investors. What's also interesting is this finding. The survey finds that General Counsel on average support ESG-related activities, but at the same time harbor significant concern for the legal regulatory risk of these activities. So they pose a question: can companies find a balance between doing good and not creating unexpected damage? And I'm sure this question may probably sit on some of your minds too. So the answer to that is, no matter what, we still argue that a proactive approach is required towards managing ESG, especially if we are worried that ESG activities may create additional or unanticipated risk. And this is because, apart from all the facts that we shared earlier just now, policy interventions is definitely on a steep growth. In fact, with the Paris Agreement setting more milestones for 2025 and 2030, we will only expect government responding more to these stock tick milestones. And you may also notice already last year how a lot of countries shared their carbon neutral goal, including China, which shared that they will achieve this goal by 2060, and Hong Kong by 2050. Fiduciary duty is another area that we should keep a close eye over. Freshfields have done 3 reports on this topic, and in its 2019 report, it has made a conclusion that the conceptual debate is over. Investors that fail to incorporate ESG issues are failing their fiduciary duties and are increasingly likely to be subject to legal challenge. Oh, there's the cover, just so you have a visual aid. And greenwashing is another topic that I think is important for us to know, and why General Counsel, or why we really need to know what the company is disclosing or how it's describing its ESG activities. In fact, greenwashing is the biggest concern for 44% of ESG investors. And a recent report by Influence Map on climate funds show that a shockingly 71% of ESG category fund have a negative portfolio Paris alignment score, which means that their funds are not Paris aligned as they claim to be. And there is also a 55% amongst those even specifically climate themed fund. And again, they are actually misaligned. Of course, that also underlines the effort globally to have green taxonomy and even a standardization of that. But as you can probably tell now, there's a lot of controversies within the sector, and there are also claims that taxonomy may be a greenwashing tactic itself. I think, therefore, a lot of being on this ESG journey is try to read up as much and as broadly as possible, and be on a learning journey with others who equally care about the topic. Again, need to emphasize that it is not all stick, but it is also about benefits for the companies. So I would like to share a recent report by ISIFMA, the Asia Securities and Financial Markets Industry Body, on why companies is investors' ESG expectations. That's the name of the report, but this is about why companies should adopt best practices on ESG issues. And the top of the why is making that it makes business and financial sense, that it helps control the narrative, and that it builds trust with stakeholders. So making business and financial sense, it lists out how if you integrate ESG in a company strategy, it can increase awareness and understanding of associated risks and opportunities, which leads to better risk management, more resilient operations, and better strategic planning. It would also lead to more empowered, purpose-driven, and loyal workforce. It would increase customer trust. It would increase trust of investors. It would all contribute to long-term resilience and value. As for controlling the narrative, I find it interesting that really I just need to cite one sentence, and that is companies are being researched, assessed, and scored by investors and independent ratings providers, whether they like it or not. So why not control what you disclose? Okay, very quickly. So what exactly is ESG? It could be concepts. As you can see here, the sustainable finance spectrum going from exclusion to impact investing. Again, different strategies available to investors. You probably have seen many different versions of this kind of categorizing ESG-related investment. It can also be ESG issues, the environmental, the social, and the governance. And you see this in our ESG reporting in Hong Kong as well. It could be frameworks. It could be the UN Sustainable Development Goals. It can be the task force on climate-related financial disclosures. ESG can also be the products, the fast-growing list of different types of ESG products, from bonds and loans to REITs to ESG index funds to impact funds and social impact bonds, more social finance vehicles, which Penny and I have had the privilege to work with some of the impact actors in Hong Kong. What else? It could also be the ecosystem. It is everything from the issuers to the end investors and everything in between, from the rating providers, the asset managers, to the indicators, to the institutional investors. It can also be the many acronyms from the GRI to the Sasb, to the UN Global Compact, to the Guiding Principles on Business and Human Rights. But it can also be asking why. So this goes back to some of you have actually asked this already about mission, about culture, about bringing everyone along. So in 2018, probably you remember that BlackRock, Larry Fink sent a letter to CEOs talking about a sense of purpose for the first time for companies, that they should look after stakeholders' interests and not just shareholders. In Davos, in 2020, stakeholder capitalism was the theme. And in 2019, we have the Business Roundtable redefining the purpose of a corporation, again, to promote an economy that serves all Americans. And we can extend that to serving all stakeholders. There are even companies now that would voluntarily subject themselves to a certification system where they would have to make commitment to taking care of stakeholders like environment, workers, and community. And they would change their articles of association to reflect that. And this is a fast-growing movement with over 4,000 companies now and big names that is shown here. So I don't think I have time to go through a lot of the developments and trends, but I would love to just stop here by stressing that standardization definitely is happening because some of you mentioned how there's many different frameworks out there, and it's hard to know sometimes to make sense of which ones to use. And definitely standardization for more consistency and comparability is happening. One of the biggest legislation is the EU taxonomy that was launched earlier this year. In China, there's also a green bond project catalog, and Hong Kong will be signing up to the Common Ground taxonomy, which is being developed by China and EU, a working group that's led by China and EU right now. Another trend worth noting is from voluntary to mandatory. And not only are we seeing that in the EU Sustainable Finance Disclosure Regulation launched also earlier this year, but also Hong Kong EX own listing rules, where mandatory disclosure on board's role and oversight of ESG was introduced in 2020. So I will stop there and pass it back to Penny.
Hi, I know for those who are still awake, all these can be quite daunting. All these jargons, acronyms. We do know that there are different levels of audience here, so bear with us if they're too easy and if they're too complicated. I would say that's how I started, so don't get intimidated by them. So from Tze-wei, what she mentioned, maybe we'll come a bit closer to Hong Kong and see what's going on in this market. The ESG has grown substantially across all industry and sectors. I must admit, Asia is a little lagging behind that of Europe or maybe North America. But the industry, I think the financial industry plays a very key part in this drive in Hong Kong. And I think this can be indicated by what the SFC Exchange and the Monetary Authority has been doing. So this is the next two slides is just a overview of what's happening in Hong Kong. So as you can see, the key regulators, the SFC, the Exchange, the Financial Development Council, and the Hong Kong Monetary Authority, what they have been doing, for example, the Exchange, their first initiative date back to 2013, where they have introduced the ESG reporting guide and related listing rules. And then, of course, now they have evolved that, and it has become a comply and explain method instead of voluntary, which echo what Tze-wei just said. You know that is fast evolving from voluntary to mandatory. And closer to my practice of investment funds, I watch very closely what the SFC is doing. So from 2018 onwards, they have been repeating that ESG is in their agenda. And for example, they have issued a circular to for management company of SFC authorized funds. So if certain investment funds fall into these categories, their names are actually listed in the SFC website to say that they are green and ESG compliant. So that's what's happening. And then I guess one key thing to also mention, in May 2020, the Green and Sustainable Finance Cross-Agency Steering Group, chaired by the SFC and the MA, was formed. So all the, if Tze-wei, you can go to the next slide, which is a different view of what's happening, which is sort of more like a timeline of what has been going on. So this Green and Sustainable Finance Cross-Agency Steering Group shows that all these regulators are acknowledging that they need to work together to put a scheme together to promote Hong Kong as the ESG hub. So the most recent development, which is obviously closer to my practice, is the consultation conclusion that was rolled out by the SFC on the disclosure of climate risks by the fund managers. I know this might not apply to most of you or some of you, but I thought it's worthwhile to see what the regulators are actually looking at. So they have opted to just roll out the first round of mandatory reporting, and they acknowledge market participants can be differentiated by the size of the portfolio they're managing. So if you look at the top part of the slide, they have separated into all the fund managers as well as the larger fund managers. And after the consultation, they have upped that level to asset under management of Hong Kong 8 billion. So this is quite large for Hong Kong. So I think the objective is to get the industry going and just get started, get used to that. They have to start addressing these climate-related issues. And more so, investors are asking about what the managers are doing on the ESG front. And I think in line with a lot of the regulators, what they are doing in terms of their requirements to these fund managers will fall under governance, investment management, which is their policy, their risk management to identify and assess and quantify and manage what these climate risks is in relation to the investment strategy. And then, I guess, together with all the other regulator listed companies disclosure, that is a key part of what the regulators are doing. Okay, so for those of you who are interested, SFC actually had a seminar this morning, and then they will have another one on the 12th of October. I suggest people who are in the industry to attend it, because we all want to know what the SFC is expecting and on this. And I'll be sitting in the second seminar as well. And on this note, I'll pass it back to Tze-wei, because she actually, together with our IPO team, has written a section on the ALB Hong Kong IPO handbook on the corporate governance, which is related to what we're talking today.
Thank you, Penny. So now we move from SFC to Hong Kong EX. Well, for this webinar, we're just going to give a quick overview of the ESG reporting requirements and the latest corporate governance consultation and how the two relate to each other, as we would like to leave more time for the practical tips in the next section. So the ESG reporting guide is a disclosure framework introduced in 2012, and where the disclosures will be made in an ESG report, which can be part of the annual report or a separate report. The requirements have been tightening over time with the two reviews in 2016 and 2019, with the different environmental and social aspects moving from voluntary to comply and explain. As of July 2020, mandatory disclosure requirements have also been introduced in relation to the board's oversight of ESG issues, where they would have to disclose how they manage ESG issues, the strategy, and also how they review the goals and monitoring the progress. As for the comply and explain provisions, they're in relation to 12 environmental and social aspects. And issuers are asked to provide general disclosure on related policies and compliance, and to report on the key performance indicators. These 12 aspects are listed here: 4 under environmental and 8 under social. You can see that there is climate change there, which is introduced in the latest round of review. While the report did not fix the KPIs that companies need to meet, because they want to leave it more open to allow companies to really pick frameworks that would suit them, it does give quite a lot of guidance on the process. For example, materiality is definitely a principle that has been stressed in the guide. Specifically, ESG reports are required to disclose the process used to identify and the criteria for selection of material ESG factors. And if a stakeholder engagement is conducted, a description of significant stakeholders identify the process and the results of stakeholder engagement. Materiality essentially is that you do not have to report on all the different ESG aspects, but you need to go through a process to identify which ones are most relevant to your operations and to your stakeholders and report on those. And if you have done the process by saying that they're not relevant, that would meet the comply or explain requirement. And since materiality is such an important concept, we will come back to this in the next session. Corporate governance. So the Corporate Governance Code introduced a disclosure framework in 2005, which is the disclosure would be made in the issuer's CG report There's a new consultation on the Corporate Governance Code launched earlier this year. And in it, they emphasize the overlapping considerations and disclosure obligations on issuers and directors, and in fact introduce or propose new paragraphs that will spell out that linkage better. Some of the key proposals include aligning the reporting time for annual ESG reporting with the annual report, which is also when the annual corporate governance report will be made. There's a new code provision requiring an anti-corruption policy, and having a whistleblowing policy has now been upgraded from recommended best practice to a code provision. There are also new proposals in relation to INEDs and gender diversity. For INEDs, there's a new code provision requiring disclosure of a policy to have independent views at the board level, and also upgrading of a code provision to a new rule to require issuers to establish a nomination committee chaired by an INED and comprising a majority of INED. INEDs are also where you can bring in ESG expertise if reviewing the current board capacity, you find that may be a gap there. Gender diversity, the proposal include having a new mandatory disclosure requirement to require all issuers to set out and disclose numerical targets and timeline for achieving gender diversity at both the board level and across the workforce. There's also a new CP to require the board to review annually the board diversity policy, and also a revised note to listing rule to highlight that diversity is not considered to be achieved for a single gender board. So all these are welcome by us, although we do urge that there will be further steps taken in the near future as we look at other jurisdictions. Oftentimes, there may already be setting out percentage for what would consider board diversity, and also looking beyond gender as an issue and looking at other underrepresented minorities as well. So that concludes maybe our session on Hong Kong specific regulations. And next, we'll move on to some practical tips.
Okay, so back to me again. I've put down here a Paris map because I obviously miss traveling. But I just want to point out that this is some experience that I thought is worthwhile sharing. Like I said earlier, ESG can be daunting. There's a lot of information. Everyone is throwing jargons at you, but you can start anywhere. I think at the end of the day, it will still take you to the same place. There might be hiccups here and there, but that's anywhere would be a good place to start. So I'm going to, just now at the very beginning, I mentioned that we're going to share some practical tips. I think for myself, practical tips are quite important. As I mentioned, my journey was quite long, and to get into this space, it actually takes a bit of effort. Compared to Tze-wei, when I first started talking to her about ESG, I was like, oh, really? I really got a long way to go. But I think for legal counsel especially, when we are in-house, a lot of times that we have or the market feels that, we take a more passive, supportive role of a business. But I think ESG will be a great opportunity for us to show that we can be proactive, to identify some of these strategies, which I think with our professional knowledge can really help a company get into the space and go to the right direction. So as I go through all my points, you will know that after my suggestions, Tze-wei is going to go through the similar themes and go into a little bit more details as we go along. So once you have started, I guess this goes back to what we're most familiar with, is to review and monitor. As lawyers, this has always been part of our job, compliance, looking at, once we have ensured the strategy direction is incorporated into our governance, then we have to monitor and review that it has been implemented, not just at the management level, but also at the broader business level. And with monitoring, that comes down to reporting, whether there are any issues that we need to point out, is there anything that needs to be improved, And with the employee level, which is something that I think as internal legal or compliance can also look at, we'll be working together closely with human resources just to see what the employees can do. Can they be part of the ESG strategy going forward? And then Tze-wei mentioned earlier, understanding the materiality of the disclosure requirements. This is also a part we can play very crucially because as you see, regulations are coming up. There will be more disclosure requirements. Is the firm going to just do the bare minimum, check the box? I've done it, I put it there. Or do you want to go a bit further? Disclosure to taking into account what stakeholder wants to see, and without crossing the line and putting in too much, which might lead to potentially even complaints and litigation. So we really need to look at what is relevant, what is material, and make sure that the disclosure generally to the public would be appropriate. And the last, definitely not least, is due diligence. Of course, this is also something that we look at quite closely in our day-to-day work in terms of, depending on what business you are, the whole supply chain, basically your ecosystem of your business would have elements that you might want to look into. For example, your supplier, your service providers, are they your logistic company? Are they doing the right thing? Did they implement their ESG policy in there? That is something that we can also look at. And I will pass on to Tze-wei, and I know she has more to add to what I've just said.
Thank you, Penny. Yes, thank you for highlighting some of our practical tips. And here we thought it may be helpful to go back to the Esg report that we referred to earlier, and where they shared some common pitfalls that they have noticed in sustainability disclosure. These are the top three. Bridging the expectation gap between what you're disclosing and what investors or the public are expecting. Avoiding a compliance mindset, which we hopefully have established that point by now, because otherwise you may miss some risk or opportunities, and repositioning ESG from a marketing and branding function to really seeing it as a core part of your strategy. So just sharing some data that the report gave us, which may be interesting for you for your reference. So here is one example that the Esg report gave on investor-investee expectation gap. So here we have an energy company, and what it is disclosing is the number of years that it has produced a sustainability report and the number of years that it has referred to TCFD or GRI or other standards. But what the investors are really expecting, what we call decision useful information, is actually what is the strategy of the company and understanding the company's approach to key material ESG issues, which includes is CO2 scope 1 and 2 emissions, is quantified short-term carbon emission targets, and also is climate scenario assessments. Another helpful tip from Esg's report is this. It refers to the disclosure framework in the Task Force on Climate-Related Financial Disclosure. Here you can see that again, it really covers everything from governance to strategy to risk management to metrics and targets. And Esg's tip is that this can be applied across other ESG disclosure too. That it is not, again, it's not just about disclosing certain activities for compliance or for checking the box, but really using the chance to review your governance structure, review your strategy, review your risk management, and see how it can also help you identify new opportunities. And then, of course, setting metrics and targets that are achievable and that really give you the data you need. So I would like to also here share, I'm having some challenge with my, maybe this is easier. Okay, so I would like to share the Hong Kong EX Guide for Board and Directors re ESG. It's called The Leadership Role and Accountability in ESG. It's published in March 2020. In this report, in this guide, there have been, they share 9 steps, which I thought are quite helpful. And I have categorized them into the following. So step 1, 2, and 3 is about the people and the governance structure and processes, and bringing together, as Penny earlier highlighted, the different departments from sustainability to operations to finance to compliance to investor relations, and agreeing on their respective roles. So these are all the internal, getting the structure and the people ready. Then you have step 4 and 5, which is really understanding your ESG-related risks and opportunities through engaging your investors, engaging your key stakeholders, and conducting the materiality mapping. Then we have step 6 and 7, which brings us back to the internal. Once you have done that materiality mapping, once you have done the engagement, how does it impact your strategy? How does it impact your risk management? And then 8 and 9 is goals and monitoring that performance and knowing that you collect the right data. You're collecting the right data from the right people for your not only ESG reporting, but really for informing your ESG related and just overall business strategy and risk management. Okay, so checklists. Well, there are many, many checklists out there, but so here is just one that Penny and I have put together for you. Yes, educating on ESG as related to your business is definitely important. Understanding why is also key because, as we already emphasized, through different reports and readings that we share, that that is key for you to understand why your company is doing this, but also for bringing everyone along. Conducting the internal review, taking stock, looking at your structures and policies, existing relationships and contracts. We mention contracts here because increasingly we're also seeing companies, they may be amending their contracts with suppliers, they may be amending their contracts with termination clauses that would take into consideration carbon emission. So there are different ways to review your existing relationships and secure some of those goals into your existing contracts. Understanding materiality, doing the mapping, doing the external stakeholder engagement, these all help you understand the risks and opportunities, but also thinking about how you communicate that with your investors and the public. And finally, again, setting goals and achievable targets and looking at whether you're collecting the right data. And if you put that against the categories in terms of how a company operates, there is the governance structure, there is the policies and processes, there's also employment practices, and increasingly looking at your supply chain monitoring. Here is just a chart that may be helpful from, again, Hong Kong EX materials showing what would be a good governance structures that incorporates ESG. You can see here there are 2 options here. There's having an ESG committee at the board level. There is also having a director that specifically look after ESG and whom ESG managers report to. And I mentioned earlier on that materiality is a key topic. And here I would like to just quickly share with you, what's the time? Okay, so like the Sasb materiality map, you notice that it has identified different industries. There are actually a total of 77 standards, as I recall. And then there are 26 sustainability-related business issues arranged according to 5 dimensions: environment, social capital, human capital, business model, and leadership and governance. And you really need to look at the map to see what are some of the issues that are relevant to your industry. Not all of them are naturally. So I would just, for those of you who have done this before, bear with me, but I thought it would be good for those who are starting out just to take a look at the map with us. So here you go. So this is the Sasb materiality map. As you can see, is arranged according to the different industries: consumer goods, extractives, financials, food and beverage. And then there are the dimensions that I mentioned earlier on along environment, social capital, human capital, etc. And you can see that, for example, when it comes to water and waste, water management, it may be more relevant to extractives and mineral processing and consumer goods, but not so much to financial. So this is one tool on materiality that may be helpful to you. And then back to our PowerPoint. Hong Kong EX has also provided a tool for you to look at the materiality for your materiality mapping in relation to the 12 aspects that you have to report on in the ESG report. And again, it works very similarly, mapped against different industry. And so, yeah, materiality mapping and stakeholder engagement could be a good starting point too, amongst the many different starting points. Final takeaways. We know we have thrown at you a lot of information today, so we try to consolidate what we said into these four triangles. The first one is step by step. As Penny said, you can start anywhere. And here we would like to also emphasize that it is really a learning journey. And in fact, you already are doing part of it because you're already involved in strategy, you're already involved in risk management, you're already involved in compliance, and ESG is arguably it is increasingly going to be some underlying key lens to doing all this, but you are already doing all these functions. So hopefully don't be too daunted. Just see it as a step-by-step learning journey. It's more than compliance. I think we probably have been like a broken record making that point multiple times. Because if you treat it as compliance, you may miss key ESG risks and opportunities. It is also more than branding. And a thing to remember is that the disclosure you do, it should be decision useful. And we would also like to stress the time horizon. This is because when we think about ESG, we are requiring a different time frame in our minds. We are very used to short-term return, thinking about short-term return, but here it really requires us to think about long-term risks and value creation. And finally, the why. This is very important because this is how we bring people along. This is also where we can be innovative, where we can think about positive social and environmental impact that we can create with our business, and also how we can contribute to sustainable growth. So on that note, I will pause and see if we have some questions.
Right. I think, sorry, it's Rahul, yeah. I think we have a couple of questions. Do you mind if I just read them out? One of the question is, where can we find the SASB materiality map? I think you shared a website. So if you can just let us know, or maybe type it in the chat box so everybody has the URL.
For sure, yes, it is online, and the link is on the page just now, but I'll happy to type it in here.
Okay. And also, sorry, go ahead, Tze-wei. You were saying
no, please go
okay.
on.
So also, how do you think, this is a question that's come in, how do you think Hong Kong is placed in terms of ESG awareness and actual implementations as compared to the other major cities in Asia?
Okay, so maybe I'll go first, and then Penny can jump in, because very interestingly, both of us being on the policy group and at the Hong Kong Green Finance Association, we are actually doing a research report on how Hong Kong can become a hub for infrastructure funds, green infrastructure funds, and where we did some comparison. So so I would say in terms of regulations, Hong Kong is pretty good. Like, it has regulations for companies, we have regulations for funds. But of course, if you compare Hong Kong with, say, Europe, we are definitely not quite there yet. But also, we do think that the Hong Kong government is doing quite a lot of initiatives already, especially in the last few years, in growing ESG awareness. And almost every month, you will see a new initiative. But we do think maybe even just in the funds sector, we can see there. If we look at Singapore, say for example, we can see that there's room perhaps for the government to work more with, like, say, ESG aligned asset managers, dedicating fund to ESG investment, etc.
Yes, I think Tze-wei covered most of the things that I had in mind. I think Hong Kong is in a good place and it's definitely heading in the right direction. And as she mentioned, everyone likes to compare us with Singapore. Singapore has their advantages in many ways. For example, their ecosystem of the ESG front is actually quite developed compared to Hong Kong. But I think Hong Kong is not far behind. Maybe share some of our experience that Tze-wei and I had recently in terms of helping organizations structure a fund structure to potentially invest in NGOs in the region. We actually come across quite a bit of obstacles, and we're hoping to work more closely together with the regulators to tackle some of them, and hopefully that will make Hong Kong even more favorable in that front. And since there's no more Q&A question there, maybe I'll take 2 minutes to just, I did mention that, we have been working with quite a lot of the NGOs and some of the organizations, hoping to, even family offices, to try to get into the area, leveraging, for example, Hong Kong Limited Partnership Fund, which is also new in the market, hoping with the initiative to make Hong Kong as the hub in this space, basically. And of course, Hong Kong has the great backing of China, which China is also leading the space in, for example, carbon trading, which we are also looking at very closely. Our firm also cover a wide range of work. We work closely with our London office. We have expertise in different areas. Oh, and before I forget, we do have a ESG Legal Hub, which we put all information in terms of ESG in there. The link is in the slide. It's esglegalhub.com, which is quite easy to remember, especially with the COP26 coming up. We'll be posting up quite a bit of material. For example, Tze-wei and I would have a three-part series just on SFC's regulation on climate risk disclosure that's coming up. So there's some information for you if you're interested to learning a bit more. So we actually made it in time.
Yes, it did. Thank you very much, Penny and Tze-wei. That was quite an interesting, entertaining, and insightful presentation. I've shared the link of the ESG Legal Hub in the chat box. So everyone, all the attendees, if they'd like to check out the link, please do so. It's in the chat box. Great. And again, if you have any questions for Penny or Tze-wei, please feel free to contact them directly. Their information is, again, in the chat box. Right. So thank you so much, Penny and Tze-wei. And hopefully, you'll be getting some emails from today's attendees asking you for a copy of your slides. Thank you so much.
Yeah, we see there's a question from Eric Chin, but maybe we can answer that separately.
Right. I think you haven't partially answered that talking about Singapore. So if I know Eric and will share his details with you. Thank you so much, Penny and Tze-wei.
Thank you.
Thank you.